Ladies and gentlemen, welcome back to the channel. I hope you are excited for a crazy upcoming week in markets. Not just Tesla. Yes, Tesla is going to be absolutely insane, but there is also many other factors that could contribute to a really good week or a really bad week for markets. Here in this video, I will explain earnings season, the Fed, Tesla earnings specifically, and what all of this could do. Could this be a moment in which the golden age really starts to become obvious? Maybe the Fed is super dovish, and maybe they kind of walk back some of their prior statements that Trump's policies are going to be inflationary. After all, it doesn't take a genius to see it's public information. Doge has already saved the U.S. taxpayer $23 billion. That is an active disinflationary force within our economy. Obviously, no guarantees that Powell is going to be dovish, but I will share with you the expectations that I have for this Wednesday's Fed meeting. We also have a lot of other big tech earnings. We have somewhat of an AI scare going on right now with DeepSeek, and how big of an issue could this be for our markets? With that said, we also have, to add a little bit more craziness to this week, a ton of economic data. I will share my expectations with you for all of this in this video. And we will take a bigger highlight on Tesla stock. I will share what is important for Tesla, what will move the stock higher, what could move the stock lower, and why I'm so optimistic about this earnings report from Tesla. Now, we will have the bigger breakdown for Tesla earnings, go over all the specifics, probabilities, everything we normally do for Tesla earnings on Tuesday. But this is going to be a pretty good breakdown as well. So let's start first with Tesla stock. Now, Tesla stock has fallen for 4 days in a row. It's been red. Really, ever since the inauguration, it hasn't been good for Tesla. Largely speaking, Tesla stock is still down about 17, almost 18% from its previous all-time high at $488 per share. Right there is a positive setup heading into Tesla earnings. You would rather a stock at least consolidate or have fallen a little bit after a big gain before a big catalyst, because then you're set up for a, sell the news event even on good news. We've seen this with Nvidia before. We've seen this with Tesla before. We see this all the time. So the fact that Tesla has shaken out some of the weaker-handed investors, if you will, I know that's not like a super professional thing to say. I guess that's the easiest way to explain it, is actually a positive thing. Now, specifically for Tesla, I will now share with you the expectations for Tesla earnings, and they don't matter too much. Okay, analysts expect Tesla to post revenue of $27.27 billion for the fourth quarter. Whether Tesla misses or beats this number, it's really not going to move the stock too much. Okay, with net income expected to come in at $2.31 billion or 65 cents per share. Now, Tesla in prior quarters has seen a big influx, a big, positive adjustment to Tesla's profitability. This $5 billion in the same quarter last year. So there's going to be a comparison weird thing that happens because Tesla had $7.93 billion in net income in the year ago quarter, but it was $5 billion in adjustments because of the release of valuation allowances on deferred tax assets. So basically, they just depreciated a lot of stuff, okay? So the numbers aren't going to matter too much here. Auto gross margins will matter, and a lot of people expect just kind of okay news there. Really what I've noticed on Tesla earnings, especially recently, the last couple of earnings or so, when we get the numbers themselves, the auto gross margins, revenue, profitability, the whole slide deck, Tesla stock moves up or down 1% to 2%. It's really not the numbers themselves that move Tesla. It is the conference call. Now, let me share with you what Gary Black says about Tesla's Q4 earnings call and what we will likely hear on this earnings call. He says Model Y Juniper orders are very strong in all three regions. $30,000 to $35,000 more affordable vehicle launch on track for the end of the first half of this year. Unsupervised autonomous ride-hailing deployment on track for Texas and California by year-end 2025. Cybercab volume production, 2 million units on track for 2026. FSD on track to achieve 10,000 miles between critical disengagements by the end of 2025. Tesla working on FSD licensing agreements with one or more OEMs. Optimus production still slated to begin in full year 2026. Now, we did get news recently. It's more like a rumor. It came from Tesla suppliers of Optimus that Tesla has told them to prepare for about 600 Optimus bots produced per week by the end of 2025. So we're actually now kind of expecting Optimus to be produced by the end of 2025. It says federal authority over autonomous driving regulations will be passed by Congress in full year 2025. Management still comfortable with previous full year 2025 delivery guidance of 20 to 30% year-over-year growth due to Model Y, Juniper, cheaper Tesla vehicles, and FSD advancements. Potential loss of U.S. EV credit remains a wild card. So let me tell you right now, if all of this happens, or most of this happens, Tesla stock will skyrocket following earnings. Because the three things that really matter the most for Tesla, okay, it's robotaxi, it's lower priced Teslas, and actually, it's not Optimus right now, because Optimus is not in most people's models for valuing Tesla. It is actually the 20 to 30% guidance for delivery growth this year. So as long as we get the lower priced Tesla, as long as we get robotaxis that continue to be guided for this year, and as long as we get 20 to 30% delivery growth, Tesla stock's going to skyrocket. Now, Optimus could be a big positive catalyst as well, as long as we get all three of these things, okay? If we get guidance for the lower priced Tesla, if we get guidance for robotaxi this year, but Tesla kind of cuts their previous guidance of 20, 30% delivery growth, and they say, well, that's going to be like 10% now. It doesn't matter. The stock's going to fall. Okay, as long as they keep all three of those things, everything else is kind of like a sideshow. Okay, Optimus could be very positive. FSD to achieve 10,000 miles between critical disengagements. That's big. Waymo's at about 17,000 miles. So that's getting really close to being at that robotaxi standard. And then like Cybercab, 2 million units by the end of 2026. That's all going to be a positive added on top of that. But it's those three things that matter the most. Now, what's interesting is I believe at Tesla's at $405 per share for Tesla stock, you're actually not pricing in too much good news. Okay. Now, I think the stock would still fall if any of those three things were to miss, but everything else could kind of just be okay, and the stock would likely do very well. Now, if things are better than expected on all fronts, which I think they will be, that's where Tesla stock will skyrocket and very shortly be in the 500s. So if we consider Tesla just independently from the markets, if Tesla was in its own little bubble and the markets did nothing, okay, they didn't crash via DeepSeek news or negative Fed. They didn't rocket because of anything else. I believe Tesla earnings as a singular kind of event are going to be very positive for Tesla stock. After all, I mean, we could rally 17, 18% from here just to get back to our previous all-time high of about $488 per share. Now, could there be enough juice, enough momentum and optimism to rally into the 500s? I think so. Now, one thing that I will point out that is not listed here from Gary Black that is definitively happening very soon is FSD is going to launch in the Chinese market. I think Europe's going to be behind a little bit, especially certain areas like the UK that drive on the right side of the road. There's only a couple countries that do that, and Elon has already said it's going to take a little bit longer for FSD to enter into those countries. Guys, 2 days ago we got news that advanced autopilot or enhanced autopilot is starting free trials in China. We just got news that ASS is starting free trials in China. That means all Teslas are going to get this software as a free trial. That means FSD is right around the corner, probably less than 30 days away. And that could be something that is announced on Tesla's earnings call. Now, let me just run you some simple numbers here. Okay, let's say there's, in the previous video, I used 2 million vehicles as an example. Let's say there's 1.75 million Teslas in China. Times this by 20 as a 20% take rate, you're looking at 350,000 Tesla vehicles that could potentially buy FSD. Let's say that's $5,000. That's $1.75 billion, okay, of revenue for Tesla. If this is around 90% net margins, that could be about $1.575 billion of bottom line profitability. Divide this by about 3.3 billion shares outstanding, and you could be looking at about 47 cents to Tesla's EPS. That could be added via this. Now, this could be a one-time kind of thing. This could be a subscription, recurring kind of deal. It would probably be a mix of both. Some people would just go out and buy FSD. Some people would just opt on the subscription. Out of the 20% take rate, times this by Tesla's current multiple, it's really around 135 times forward earnings. I'm going to use 120 just to give it a little bit of grace here. And you could be looking at about $57 worth of value added to Tesla's stock just on this alone. I mean, I think that is something that not a lot of people are actually considering. Now, if we use, 1.75 million Teslas out on the road in China today, times this by, again, the same 0.20 take rate, you get 350,000 vehicles. If nobody opted to buy FSD fully, full price outright, and it's still $99 per month, that would bring you in about $34.65 billion of revenue per month. Okay, so times this by 3, because there's 3 months in a quarter. That's almost $104 million. Times this by 90 to get the 90% bottom line profitability. That's about $93.5 million of bottom line profitability per quarter. Divide this by 3.3 billion shares outstanding. Okay, so I added the extra zero that I misclicked, and you get about 3 cents of EPS added to Tesla earnings every quarter. Now, that may not seem like such a big deal. Again, times this by 120 times forward earnings. That adds about $3.40 or so to Tesla's bottom line profitability. Now, if you kind of take 3 cents times 4 quarters in a year, that's 12 times that, right? 0.12 times 120. Then you're looking at about $14 of added value to Tesla's stock. But consider 3 cents of EPS when Tesla's expected to only do 65 cents of EPS for this prior quarter. Like, that's not huge, but it's like a 5% boost to Tesla's current quarter profitability, theoretically, right? So it's not nothing, okay? And I think I'm using some pretty conservative numbers here, to say the least. And it is bigger than, Wall Street's not even thinking about this. Now, unfortunately, Tesla stock does not, have its own exchange. It is on our markets. It is very vulnerable to algorithms. It's vulnerable to what's happening in the broader markets. So for that, we really have to consider other things that are going to be happening in the markets, including earnings from other big tech names. Now, starting off on Monday, you have SoFi, AT&T, and other banks, Monday pre-market. Monday and after hours, you really just have a lot of banks as well. You do have AGNC Investment Corp, you have Crane, Berkeley, Alexandria, and Nucor. Tuesday pre-market, Boeing, GM, Lockheed Martin, Royal Caribbean, RTX, JetBlue, Cisco, and Kimberly-Clark. Tuesday and after hours, Starbucks, SAP, Lending Club, Logitech, Stride, PCA, Chubb, F5, and Stryker. Wednesday, ASML. That's one of the companies that creates some of the equipment to actually make semiconductors. So they've had some really bad earnings recently. We'll see if that gets a little bit better here in this quarter. That could be a decent mover for the AI category. Progressive, T-Mobile, ADP, Teva, General Dynamics, NASDAQ, and others. Wednesday, Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Wolfspeed, Celestica, and Western Digital. Thursday pre-market, UPS, MasterCard, Dow, the Blackstone Group, Nokia, Southwest, Caterpillar, Comcast, and Mobileye. Thursday and after hours, you have Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, SkyWest. And then Friday, you have ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, and Charter. Now, what's actually interesting is you tend to see Google and Amazon also report alongside Apple. So normally you see Google report alongside like a Meta. Most of the time it's like Google and Meta or Google and Amazon, right? That report the same day. And it's usually in the same week as Apple. But they're not listed here yet. So they're going to be reporting the following week, which I do think is kind of weird. Now, the big thing that markets care about in regards to these big tech names is monetization of AI. Investors want to know that the $80 billion Microsoft is going to spend this year on AI is going to actually make them something. Okay, that it's not just throwing money away for many years. Same with Meta. Meta is expected to spend about $65 billion in AI. And Wall Street wants to know they're not just pissing away $65 billion. That's where DeepSeek comes in. The news that DeepSeek has created a ChatGPT-like large language model for $6 million really undercuts everyone else. Now, I don't believe China, okay? We can't even get auditors in China. Why would I believe a startup company in China that they create a large language model undercut all US AI companies by a long shot? I think to a certain degree, that news was designed to stoke fear in US AI companies. Now, some people say it's open sourced and eventually the exact numbers will come out, blah, 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 blah. That's probably not true. It's probably not going to happen. We'll never know definitively. And that's the thing. Does Wall Street kind of realize that you can't trust China's numbers and shrug this off? Or does this become a larger issue? We've seen on Friday, NVIDIA and many other AI stocks, or deemed AI stocks, were down a lot. And that did pull down the broader index. But it didn't go full-scale panic mode on Friday. It was close for a minute. It felt like we were starting to get a little scared there. But we did kind of hold up a little bit. I think over this weekend, we've had some time to reflect on this. You could see a recovery here. You could see a bounce. You could see some of, the doubt start to creep in that maybe DeepSeek is not being 100% accurate with their numbers. That's my feel about this, that you could see markets kind of shake off that news. and get back to business as usual and start to, look ahead to big tech earnings. Now, we also have a lot of economic data coming out this week. On Monday, Chicago Fed National Activity Index, new home sales for December, new home sales month over month, as well as the Dallas Fed Manufacturing Index all come out on Monday. You do have a 5-year bond auction as well. These are going to be important because the Fed controls the short end of the curve. So the Fed controls like the 3-month to maybe 2-year auctions and treasury yields, okay, with their policy. They don't really control the 5-year. They don't control the 7, 10, 20, 30-year bonds, okay? That's where you actually get your mortgage rates from, your auto loan rates from, right? So that's why the Fed cutting rates has not cut rates for your credit cards or for your mortgages or for your auto loans. So these longer duration bond auctions are important. Okay, now Tuesday you will get durable goods orders month over month. Last month was negative 1.1%. We'll see if that gets revised away. We are expecting a positive 0.8%. Now, S&P Case-Shiller home price year over year expected to be up about 4.1%. CB consumer confidence is expected to also come in a little bit higher than last month's 104.7, coming in at 106. Richmond Fed Manufacturing Index expected to be terrible still. Dallas Fed Services Index expected to be in line with last month. And then we get a 7-year bond auction on Tuesday, January 28th. So some big data, Monday, Tuesday, durable goods orders is really the biggest thing. It'll tell us if the economy is still holding up a bit. But Wednesday's your big day. And you have retail inventories excluding autos, goods trades balance, some smaller data, some oil data. But it's the Fed. Now, the Fed's going to be the biggest wild card this week because the Fed's going to be asked about Trump and about Trump's calls on the Fed to immediately lower rates. Now, the Fed has made it very clear before the inauguration that, well, they're not necessarily in a rush to raise rates. They're not necessarily in a rush to cut rates. They're waiting to see what Trump policies look like. We're probably going to hear a lot more of that, but you could see some of it start to get walked back. You could see the Fed kind of try to prepare the markets for rate cuts. The Fed's not going to come out tomorrow or Wednesday and say, oh yeah, things are fine. We're going to be cutting rates multiple times this year. No, they're going to stick to their guns, but they're going to start opening up the door to cutting rates. Perhaps if Trump policies are not as inflationary, then that's something that they could say and start to kind of creep another rate cut into the markets, okay? Because the Fed does what the markets are pricing in. So it's really just jawboning the markets into, pricing one thing in versus another. So I'm actually optimistic that the Fed this Wednesday is going to start opening up the door for more cuts. I would also be interested to hear what the Fed has to say, if they comment on this, about the decline in current market rents. Current market rents just went negative for the first time since Q2 2010, and they really don't ever go negative. So that's disinflation in the shelter market, which is going to really help bring down those CPI numbers. So I think the Fed will be a positive catalyst, but don't be surprised if markets are a little bit nervous throughout the trading day on Tuesday and perhaps on Wednesday heading into the Fed itself. Now, on Thursday, GDP growth rate quarter-over-quarter advanced data for Q4 will be coming out, expecting about 2.7%. Last quarter was 3.1%. Initial jobless claims will be coming out as well, expecting 225,000. Pretty simple there. Higher is worse, lower is better. Real consumer spending, expecting that at 2.9% quarter-over-quarter, pending home sales month-over-month and year-over-year for December as well on Thursday. On Friday, core PCE month over month, expecting this to come in at 0.2%. That's not a terrible number. That's 2.4% on a 12-month annualized basis, but last month was 0.1%. So if we can come in lower, come in at a low 0.2 or 0.1. That's going to be really good. It's going to be really good for markets. Now, personal income month over month is expected at 0.4%. Personal spending month over month is expected at 0.4%. Personal spending, that's the same as last month. Personal income is expected to rise from last month's 0.3% again to 0.4%. Also, what's going to be important is Fed Bowman's speech on Friday. That'll come out at 8:30 in the morning. It'll be the first time that we hear from the Fed following Wednesday's Fed meeting. Chicago PMIs will be coming out as well at 9:45 in the morning on Friday. All of this week's data really sets us up for another volatile week. Therefore, after in the first week of February, when you get ISM manufacturing PMIs, JOLTS job openings on Tuesday. On Wednesday, you get the ADP employment change, ISM services. Thursday, you don't get much. But then Friday, you get that non-farm payrolls report and the unemployment rate on February 7th. So really the next 2 weeks are going to be pretty insane. Now, also some pretty big news today. It was reported earlier today that Colombia has actually rejected 2 repatriation flights, essentially taking illegal immigrants from Colombia that came to the U.S., taking them back to Colombia. They rejected those planes the ability to actually land in Colombia and bring them their citizens back. Trump's on it. Trump says he will impose an emergency 25% tariff on all Colombian goods coming into the United States. We'll raise that to 50% in 1 week. Now, again, just to kind of reiterate this news here from Finance Lot on X, this says DeepSeek is the black swan OpenAI and NVIDIA didn't see coming. CNBC is all over it, questioning what happens next now that this free open source model costs 30% less to operate on old hardware. And he says here in an older post, it's going to be a wild week. Once investment media catches wind that DeepSeek requires 97% less compute but outperforms OpenAI, suddenly they'll be comparing NVIDIA to Cisco, which obviously would, be a big problem. And honestly, I think that's one of the biggest wild cards for this week. Like, I can sit here and definitively say earnings are probably going to be really good. I could sit here and say the data is probably going to be a lot of the same old that we're used to. I can say that we're probably going to get a slightly dovish tilt towards the Fed on Wednesday. I can say all of these things confidently, but I cannot say for sure how Wall Street is going to take this DeepSeek news. If this could be a black swan event for NVIDIA, for our markets, or if it's something that's brushed off. I think we'll really have to see over the next coming, couple of hours and days, but there is a potential here that it could be really bad for NVIDIA. It really could throw into question why companies are investing so much when there has to apparently be an easier way to do it. Now, again, I don't believe the numbers, but judging off the sell-off we've seen from NVIDIA on Friday, a lot of people are believing these numbers that DeepSeek is throwing out. I really think that's the biggest wild card for this week that could affect, our favorite stocks out there, whether it's Tesla or small caps or cyclicals, all of the names that should do very well in 2025, even though there's a very strong bull case for those names. If you kind of see the market sell off, it takes everything else down with it. That is a risk, but again, we just don't know how much of a risk that's going to be until the markets open tomorrow. Ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.